to the Inspire Wealth podcast with Prof M, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome back to another episode of Inspire Wealth. I am your host, Prof M, aka Mallory Meehan, and today I'm joined by my friend, Jeffrey Holst. Jeffrey, thank you for being on the show today.
Oh, thanks. I appreciate it. We should have done this a long time ago.
I know, really. I mean, I met you like almost 2 years ago, and it's now taken us.
Is it? It's been that long?
Been that long, yeah.
Where did we meet?
BBCon 2023.
2023. Wow. Yeah, 2.5 years ago then.
Yeah, right.
Because it was like October then.
Right, exactly. So time goes by, you know.
Yeah, that was Florida, right? That one.
That was Florida. Yeah, that was Florida. Okay, so Jeff, tell us a little bit about your background and kind of lead us up to how you got into real estate.
Okay, so that's like, there's a lot to unpack there. So I'll give you the super short version. So I grew up in a family in West Michigan, so like Grand Rapids area. My parents had a few rental properties, so I always had a little bit of exposure to it. I think not like maybe 7 or 8 units of single family houses. And they were like the side landlord kind of thing. My dad was a lawyer, so I had exposure to law early on. And I don't know. I didn't know what I wanted to do. I knew I liked real estate though. So I kind of got into real estate by default, but that's the real way I got in. But the thing that I ended up doing is I went to law school because I was like, well, I don't know what I want to do, so I might as well be a lawyer. I also went and got an MBA, so we have that in common as well.
We do.
JD and an MBA. And I got the MBA kind of by default because I started dating my ex-wife, and I was like, I don't want to go away to law school, and there's no law schools in Grand Rapids, so I'll get an MBA while I decide if we're going to be serious or not. So it worked out. I mean, we got the MBA, and then we got married and went off to law school together instead. So so I did that. In 2007, I graduated law school. I actually flipped a house while I was in law school. That was my first real estate investment. Yeah.
Okay.
Yeah, I did one flip with a friend of mine who's now a pretty regular business partner of mine. I think we have about 200 units together right now.
Wow. Okay.
He's very successful. He's in the Detroit market. And we bought houses back, 2011, 2012 for like $3,000, $5,000,
Yeah. When it was,
and these are like pre and post World War II colonial brick houses that are like 4-bedroom houses made out of solid brick. Like the cost of, you could get $4,000 for the brick in them now, right? Like you just take them apart and sell the brick, it would be worth $4,000. So we knew they were good investments, and they rented back then for like $600 a month. So like if you got a $4,000 house that you could put, $2,000 or $3,000 in fixing it up and get $600 a month, it was just stupid money, right?
You're going to make your investment back in a year.
Yeah, a year and a half, right? So, I mean, that kind of cap rate is ridiculous. And,
right.
And so what we did during that time, actually, this is like the Great Recession. We would buy these houses, we'd put some money in, we'd get a Section 8 tenant in there, $600-700 a month, and then we would sell them to foreign investors at an 8 cap. So we'd sell them for like $40,000 and, for cash, because they would never appraise for that. But it was mostly Japanese and Australian investors. They would reach out to us because like a friend of theirs would be like, hey, I put $40,000 in this deal and I'm making 8% on my money and it's great. And they're hedging against their currency too, right? So these were primarily really rich people that were saying, hey, we want to be exposed to US dollars and we want to return on our money. So, and I was practicing law back then. So I would help them with setting up like LLCs and all this stuff and all the compliance stuff. And it worked really well. And every time we'd sell a couple of houses, we'd use the money to buy a slightly nicer property for ourselves.
Okay.
And that's how we built the initial portfolio.
So were you using like 1031 exchange strategies, or were you just...
No, we were just paying the tax. It didn't like... it would have been hard to 1031 because you're still dealing with like $30,000
Yeah,
profits, right?
right.
Like, and yeah, we could have 1031 like, and we have done that since, right? Like we a lot of the houses that we bought, like when we would sell these properties, we'd get like, we'd take a little bit of money to live on, and then we'd take the rest of the money and buy a property. We would do a lot of 30, $40,000 houses back then. So we're buying something that's 3 times, 4 times the price of what the other ones would sell for fixed up. And you buy those and then you rent them out, and the returns weren't as good, but we knew the market. We're like, these areas are better long term, but more appreciation. So come around 2016, 2017, we ended up packaging those up and selling them and 1031ing into apartment buildings. So we'd sell like 10 houses and get, we didn't have any debt on it. So you'd get like, 10 houses and maybe get like 75,000 a piece on them. And you take $750,000 and put it down on a $2 million apartment building. So we did that. I think we did that 3 times for the first, like the second, third, and fourth apartment building that I bought. That's how we
Wow.
got it. Yeah.
Okay. So you own about, did you say 200 units in
In,
Michigan?
in Detroit, yeah, with him, I'm at like about 350, something like that. I think it's maybe 100. It's almost half and half residential between Detroit and Chattanooga. I moved to Chattanooga in 2010, started investing in Michigan in 2011, but I didn't understand the market here. So I started investing here in 2016. So I took about 5 years of getting to know Chattanooga before I felt comfortable buying here.
Yeah, and I think that's so important for people to understand is that knowing your market and knowing exactly kind of what's happening in a holistic viewpoint is so critical when, you're going to make these kind of decisions because it could make or break, a deal.
Yeah, well, and also the long term difference, right? So you could buy a $30,000 house in 2010, 2011 in Detroit, or you could buy a $30,000 house in Oak Park, which is a submarket of Detroit. Well, the houses in Oak Park are worth 250,000 now, and the ones in Detroit are worth 60 or 70, right? Like, depending on where they were in Detroit, obviously some parts of Detroit have appreciated a lot more than that. But I mean, you can't know that unless you know the market and you know what the long term development of it is.
Yeah, absolutely.
And so that's I think the key for me was like, I only invest where I know. I actually think about it this way. You'll like this. So there's a basic finance principle that says that your return on investment is just a product of your risk-free rate of return plus the risk premium. Like that's the formula. Your total return is risk premium and the risk-free rate of return. So what I like about real estate in general is that it's an inefficient market, so it's possible to take less risk than the market risk rate of return, risk premium. So what I mean by that is, I don't buy duplexes anymore, but there's a street in Chattanooga where I've owned like 10 duplexes. If somebody came to me with a deal on that street today, I might buy it. I might not, but I'll know right away whether it's a good deal or not. I'll be taking less risk than you would if you bought the same property for the same money because I know the tenants, I know the contractors, I know the bankers. I'm much more efficient at handling that risk there. So I'm personally taking less risk. So my investment philosophy for a long time has been, how do I mitigate my own personal risk relative to the market? If I can invest at a risk premium that's greater than the actual risk I'm taking, then I do it. If not, I don't.
No, it makes total sense. And I mean, for people who study stocks, it's kind of the same thing. It's like you are studying that company's, their all of their returns,
Yeah.
all of their K2 K what do you call them? Their tax returns and
Yeah,
everything.
yeah, you're looking at all the K1s and all that.
Yeah.
But the reality of it is, it's a lot harder to do that in the stock market than it is in the real estate market
Oh,
because it's a
absolutely.
much more efficient market. You have major firms doing data analysis. You have that in real estate too. You've got the BlackRocks of the world and stuff. But BlackRock can't possibly be more good at have more expertise than I do on that one specific street. Like it's not possible because they have to do this broad stuff, but they certainly could know more about Microsoft than I can. Does not matter how much time I spend studying Microsoft. The analysts whose job it is to study Microsoft are going to know more about Microsoft than me because
Right.
it's literally that's all they do,
And
right?
that's
And they
why
work for giant hedge funds.
I feel like real estate is one of those things that people can truly be an expert on a very specific part of a market and really understand what's happening in that market. And again, it sets them apart and it reduces your risk.
Yeah.
And so before people take the jump, I think it is really important for them to do their due diligence, not just on the specific property, but on the market itself and that neighborhood that that property falls in.
Yeah. Well, and also the property asset type, right? So like,
Mm-hmm.
I have friends that invest in 300 unit A class apartments. I've never done that. If one came up, I mean, there was one half a mile from here that someone pitched me, and I was like, I don't even know how to buy that. Like, I don't. That's not. I'm sure it's probably a good deal. I don't know, right? I'm not sure how to deal with that, but because I buy 10 to 50 unit buildings, like that's what I buy. Like
Mm-hmm.
the different bankers for that, just different financing products. There's different challenges. Now, people that buy 100 unit buildings, they look at me. I have a friend who he has 3,000 units, right? And he says to me, "Oh, I can't believe you're still buying those like 20 unit buildings. They're so hard to manage." And I'm like, "No, they're not. They're easy." But the difference is like I have the process in place for that. I'm only buying in Chattanooga right now. Like if I'm going to buy something, it's going to be like within 30 miles of where we're sitting right where I'm sitting right now. And as a result of that, I'm going to use the same contractors, the same property managers, the same bankers, the same lawyer, all of this stuff is going to be the same. And so like for me, I've created a system that allows that to be particularly easy for me. And as a result, I can outcompete someone who has more resources than me.
Yeah, which is crazy because, somebody who's buying 100 unit apartments, they may have better access to capital or more access to capital.
Well, this guy definitely does. I mean,
You know,
he has a huge name, and
but
he's been on a
he's
lot of.
not going to cross over into a different type of product offering because like you said, he doesn't have the same skill sets or he doesn't have the same resources already built in like you do, and it's basically a plug and play every time you find a 22.
Yeah, well, and it's the same for him, right? For me, like I'm not going to cross over and do what he does unless I have like a real passion to learn that market
Mhm.
because I don't have the resources for it right now.
Yeah. Okay, so you have apartment buildings in Detroit
I
still.
do. In
Okay.
this, actually, we don't have any in the city. They're all in the suburbs
And the
now. Actually,
suburbs.
mostly the one county north of Detroit. But yeah,
Are you still focused on like Section 8 or have you kind of evolved out of that? What's
yeah.
the strategy
We
there?
have a mix now. So we do have a couple of buildings that are primarily like workforce Section 8 housing. It's not 100% Section 8. But it's 85-90% of that. I still have 42, 31. Yeah, but like three buildings like that are like account for about 120 units. So the majority of it is like that. But we do have like some higher end properties. So we have some really nice condos now and some single family houses in like better neighborhoods. And that's just a function of stability, honestly. Like we're like trying to diversify risk
Yeah.
in doing that. And then there's a couple of places where we've bought stuff because we're looking at it and going like, well, we got four properties in the same like right in a row in a block, and like the path of development is coming. So like some point we're going to develop them. We'll tear the houses down and build something there. So
Mhm.
we have a few things like that. That's my Michigan portfolio. I don't actually focus on it that much because my buddy from law school actually has a property management company and he deals with
Oh,
it, and
perfect.
like
Yeah.
I don't spend a lot of effort on that. And where I do spend my time is the stuff in Chattanooga. But it's still here. My partner in Chattanooga has a property management company, so I don't do like day to day management of anything other than one commercial building that I have. But that takes like 2 hours a month to manage. So this is just tripling that, like 5 tenants, kind of thing. So
Man, you're living the life, I'm telling you.
yeah, it's almost like being a professor.
Oh. Except you don't have to answer 100 plus emails a day from students asking you questions.
I get a lot of emails from people asking me questions because I do a lot of podcasting and like social media stuff, but I don't have to answer them.
That's true. That's
I
true.
can just ignore them. Like, like if I answer,
Just
it's
gonna
just
ghost
like
you.
on my time, and
Pretend like I
there's
never
really no
got
upside. But I do answer most of them. So if people want to email me, I'll try to respond.
it. Okay, that's great. So I want to know what your opinion is overall of Section 8, because I think a lot of people, might play around with that idea, thinking that it's guaranteed money from the government, but we've seen that the government is going through some changes now.
Sure.
And, so what are your thoughts on Section 8 as a whole and people maybe getting into that type of investing?
Yeah, well, I mean, you do have to concern yourself with the political side of it, right? Like, so the starting point is like, where is that program going? Now, it's been around for a long time, and it's really stabilizing for the real estate market. And we do have a president who is a real estate investor, so I think there's a good chance it'll survive this round of cuts as well. So I'm not super worried about the political side of it, but also I think if you're going to invest in areas that are heavily Section 8, you need to be careful because there is always that possibility that that program could get dramatically scaled back. Um, and or they could change the rules for what qualifies. That happened in Detroit actually, not to us because we were fine, but there were a lot of buildings in Detroit that were operating without rental permits. Like they shouldn't do that, but there were a lot of people that did it. And Detroit was way behind in enforcement, and it came from the feds. They were like, you don't get vouchers if you don't have an adequate rental permit.
Mm-hmm.
And the permitting system in Detroit is really slow and takes a long time, and a lot of those places might never recover from that.
Wow.
Right.
Yeah.
So there is that risk. Now, of course, if you just did it right the first time, you wouldn't have had that problem. So, but there's always like, these policy changes can occur. And, we have this in Chattanooga. Like I don't do any Section 8 in Chattanooga. I have zero. And I have a similar size portfolio in both places and similar types of properties in both places. But in Chattanooga, the local Section 8 department is harder to work with. And so there's also that issue, right? It might depend on what market you're in as to whether it makes sense or not.
Yeah.
Here, they cap rental increases. And we were in these weird situations back in the day where like we'd buy a building that had some Section 8 tenants in it and their rent might be, let's just say it's $500 and it should be $800. And if I move a new Section 8 tenant in, then Section 8 would pay $800. But if I apply for a rent increase, they capped it at 5%. So they would be like, no, you can go to 525. So now I have no choice but to evict someone because they won't pay me more. But then I can move in a different Section 8 tenant. So we literally were in this crazy situation where we're going to tenants and being like, hey, like we're going to evict you. We're going to give you your notice. But if you want to rent, literally move one door over, we can keep you. And they'll be like, well, I'm like, talk to Section 8. Like they'll pay for it. The rent's $800 instead of $500, but like you have to move next door. Like literally it's an identical unit. It's like, I mean, that kind of stuff is silly.
Yeah,
and
right.
I don't like that inefficiency. And so we just haven't done a lot of it in Chattanooga. And it may be better now. I haven't done it in years, so I don't know.
Yeah.
But I do believe that you should have some market tenants in every building anyway, so you know what the market bears. Because if you don't, and you do have some kind of change in policy, then you're in trouble, right? Like you better know what the real number is.
Right. Absolutely. And so to that, I just kind of have a couple questions on just maybe general policy. So when you're thinking about, you decided to get into Tennessee and you had been in Michigan,
Sure.
what are some of the maybe regulations or hurdles that were different between the two states that you've kind of learned over time or
Yeah.
you're kind of, still
So
evaluating?
they're pretty similar when I first started working in Tennessee, but Michigan has gotten more restrictive over time, and Tennessee is about the same. So, like Tennessee is, I mean, and I think this is just a red state, blue state thing, honestly.
Mm-hmm.
Like Tennessee is very red, Michigan's kind of purplish,
Mm-hmm.
and it went through a little bit of a darker purple phase, and now it seems like maybe it's going to a lighter purple phase, but it's still like they have a little bit more regulation there. And as a result of that, they're a little less landlord friendly, particularly in the city, which is why we don't have anything in the city of Detroit anymore, because the city government cracked down on a lot of stuff, which, there's advantages and disadvantages to it. It's actually been really good for Detroit. No doubt about it. They've encouraged more home ownership and stuff like that as a result of it. Nothing wrong with that. Mm-hmm. But if you're a landlord, policies that are designed to support home ownership don't really help you that much. They can, in the sense that they raise the values of your properties and then you can sell them at a higher rate to homeowners, which is what we decided to do, and buy apartment buildings outside of the city. So, but I would say, I would say that most of the stuff is pretty similar. Um, Neither state is like the way that, like, say, Seattle or Chicago would be. Right, these places are really hard with rent controls and stuff like that.
Mhm.
So far, Michigan hasn't implemented any kind of rent control laws or anything, so it really hasn't been that much of a challenge.
Okay, that's good to know. Because I think that, the Memphis and Nashville markets are hot markets that a lot of people are looking to invest in. And so just kind of understanding
Yeah,
what's
well,
happening.
I mean, they're hot for completely different reasons. I mean, my take on it is Nashville's too expensive now, so I don't know if it's a great market to invest in. I mean, if you I do believe you can find deals in any market, just to be clear. So, like, there are people making tons of money in Nashville. There's nothing wrong with that. But you better be good at it.
Hmm.
But
You
Memphis is
better
more
know the
like,
Nashville market.
yeah, you better know it if you're going to do it. But this is true of any market,
Right.
right? But I think it's particularly true of really hot markets like Nashville, but it's even maybe more true of markets like Memphis. So the thing about Memphis is, it's a little bit like the Detroit of the South. There are some neighborhoods that are fine, and there are other ones that you actually will get shot. Like, not like pretend shot, like not like there's a theoretical risk, but like someone will actually shoot you. You know, my fiance has lived in Memphis for a few years and doesn't live there anymore because she felt like it wasn't safe.
Hmm.
Like really legitimately did not feel safe.
Hmm.
And so whenever I get someone pitching me a deal in Memphis, I'm always tempted because the numbers look really good, right? Um, I always just send it to her and say, "Tell me why this neighborhood is bad. Like, give me the reason." And so far, I've avoided Memphis completely because every time I send her anything, she's like, "Oh yeah, yeah, that place used to be okay, but then now the hospital workers Uber to work because they can't park their cars in the parking lot without them getting broken into." And I'm like, "Oh, I don't want to buy in that area." Like,
Yeah,
the
right.
Memphis has got like the systematic problem that I would be really careful about. So you better really know those markets. I mean, there's clearly really nice neighborhoods in Memphis. I like Memphis,
Hmm.
but and there's a lot of really cool stuff there. But there's also some really bad neighborhoods. So
Yeah. And that's why I think that, again, to your point of understanding your market, you got to understand the neighborhood and even like within a couple blocks radius of where you are because things can drastically change.
oh yeah,
Like, for example, I lived in Baltimore for a while and I lived in the Inner Harbor. And, you know, I was in a nice area, but literally you walk 2 blocks up Pratt Street and
yeah, and 15 years ago, Baltimore had the highest murder rate in the country.
mhm. That was
50, I
about the
mean,
time I lived there.
yeah, so it was like a very unsafe place, right?
Like, to
Like,
your point, I didn't feel safe there. So I moved back to my bubble with State College.
yeah, yeah, no, I mean, yeah, well, it's nice. I mean, Happy Valley is a good place to be.
It is. It is.
Yeah.
Yeah.
But yeah, so I would definitely be careful about all that. And by the way, that's true with comps and stuff too. I just had this conversation with I live in Puerto Rico part time, and I know you know that, but I assume not everyone listening does.
Hmm.
But I had this conversation with a real estate guy I know down there, and he was pitched the deal that looked really, really good, and he went and looked at it and realized where it was, and the comps that the wholesaler was sending him were like a quarter mile away, right? Which isn't that far, but it was a quarter mile away inside of a gated community, and they were, $500,000 houses, and the houses outside of there are like $100,000
Oh,
houses.
yeah.
You
Yeah.
know what I mean? It's like, and it's a half mile. It's like less than a half mile. It's like a
Yeah.
quarter mile. Like, if you're just like, if you didn't know the market, you'd be like, "Wow, I'm getting a home run. I'm only paying 200,000 for this house. If I put 50 in it, it's going to be worth 500." But no, if you put 50 in it, it's going to be worth 100.
Hmm.
Like,
Right.
like, it's worth less than you paid because that's what they're worth in that neighborhood.
Right.
And it's literally a quarter mile difference.
Yeah.
Um, and that can be true anywhere. Like, I
Yeah.
mean,
I
like,
mean, like New
your
York
Baltimore
City, like,
neighborhood is a perfect example of that. Like,
yeah.
you go the other side. I mean, the old, like, they're from the other side of the tracks thing isn't like it's like a real thing. Like,
Absolutely.
sometimes, like, this, if you're on this side of the road, it's bad. This side of the road, it's good. This county line changes the whole thing. This
Hmm.
township line changes the whole thing. I mean, it's really that specific, or even just like imaginary lines. Like, I live in a place in Chattanooga here where the stuff around it's nice. I mean, it's not dangerous or anything, but when you go into the neighborhood that I'm in, and it's not a gated community or anything, but like, you go past a sign that says "Welcome to this neighborhood," the housing value is double.
Hmm.
people just like that little neighborhood. It's a little pocket neighborhood inside of another residential neighborhood, and people like it. And
They feel safe. They
yeah, I mean,
feel,
and people walk around and they, I don't know, they take their dogs out. And it's kind of annoying to me. I actually kind of rather live in the less safe, cheaper neighborhood. I think I did it wrong, but hey, what can you do, right?
what can you do? Oh, that's great. Okay, so in Chattanooga, you have kind of like a mix of apartments and commercial, correct?
Yeah. We got 30,000 square foot of retail space, and then a similar amount of office, and then about 80,000 of industrial.
What are you seeing just in the difference of your asset classes across your portfolio in Memphis, given that it's the same market, but you're in different assets?
Well, Chattanooga, right? Not
Oh, yeah,
Memphis.
not
I mean, I don't
Memphis.
have
Right,
anything
not
in
Memphis.
Memphis, but
My bad. Chattanooga.
yeah. So the stability of apartment buildings is actually one of the biggest drivers to them, in my opinion, because if you have a 30 unit building and somebody moves out, you still have 29 people paying rent. But if you have a 50,000 square foot industrial space and you have one tenant in it and someone moves out, you have $0 coming in.
Mhm.
So there's something to be said about that. And also, like, apartment buildings, one of the biggest advantages is you can test the market a lot easier. Like, you can be like, oh, I'm going to try to rent this for $1,000, and if it rents, cool. The next time you can try 1,100, and it doesn't rent, then you can move it to 1050, right? But you can't really test the market with commercial because you have 2, 3, 4 tenants total. When there is a vacancy, you just kind of got to take whatever you can get, and you got to kind of guess what that market rent should be.
Mhm.
You obviously do some comparables and stuff, but at some level, if you guess wrong, you have vacancy for too long, or you lock in for multi years at a lower rate,
Mhm.
right? Like if you guess too low. And you don't have that risk with apartments because it's usually only a 1 year lease,
Mhm.
and it's usually only a fraction of the total building that you're renting at any given time.
Right.
So I like apartments for that reason. That being said, apartments require a lot more management and they have a lot more turnover. I have the industrial tenant that I have, triple net. I don't think about it. The taxes go up. I just send them the new bill. Insurance goes up. We send them the new bill. And there's really nothing that can go wrong with it other than them moving out, right? Like,
Mhm.
as long as they're there, they're good. And we bought the building. There was only a year or so left on their lease, but they'd been there a long time. The bank was very skeptical of that, made us escrow a bunch of money in case they moved out, and they gave it all back to us when they signed a new 5 year lease, right? So now they've been there, I don't know, like, long enough, and like, I mean, that is like super cash flow positive, don't have to think about it, just get a check every month kind of thing,
Yeah.
so there's something really nice about that.
Mhm.
And we don't even pay management fees on it. Like, we don't we don't have to have any property managers. Like,
Right.
it's
It's
literally
one
like
tenant.
like it requires 3 emails a year, right? Because there's like we have to send them an email in January and say, here's your new rent rate, because they have like a fixed increase in rent every year.
Mhm.
And we've got to send them an email when the tax bill comes and an email when the insurance bill comes. And that's literally all we ever do, right? Like,
That's beautiful.
and then once every 5 years we have to sign a new lease.
Yeah. Love that. That's
Yeah.
awesome.
So there's definitely advantages and disadvantages to all the different asset types.
So then you said you also own a strip mall,
I do.
and
Yeah.
how is that treating you?
Pretty good. I'm skeptical about the strip malls in general right now because, like, there's this like Amazonification, I think I would call it, thing going on. Where people like you have to be a little careful. But I'm anchored by a Family Dollar, which, there's questions with that. Family Dollar just sold to a private equity or something, but I'm gonna have a solid corporate guaranteed 5 year lease on that. They just renewed in February, so I'm pretty okay for a minute on that. I've got a church in there. I don't see that getting, like, outsourced. Like, people are going to go somewhere,
A
right?
church and a strip mall.
Yeah, church
That
in a strip
fairly
mall.
common
Hey,
in the
it's
South.
yeah, they take up a quarter of the building too, so it's like a pretty big chunk of the square footage. Yeah, between the church and the Family Dollar, that's like 2/3 of the rent that we collect. So, and both of them have pretty long term leases, so I feel pretty good about that. The smaller spaces, I worry about a little bit here and there. Like, I have a bookstore I'm skeptical about bookstores in general. I mean, he's paying his rent, so I mean, I can whatever. But like, there's a bookstore. I have a karate dojo. I mean, it's not getting outsourced. I mean, if you're gonna go take karate classes, but he's constantly like borderline late on rent or just a little bit late, and like I don't. It doesn't seem that busy when I drive by, so I'm a little skeptical about that long term.
Yeah.
But yeah, I mean, I don't know. I'm not in the market to buy more of those, but if I got the right deal, I would. This one is it's kind of a crazy deal. Like, I bought an apartment building from this guy, and he was like, "Hey, my aunt who, she owns this building. Like, you should take a look at it. She wants to sell it for like really cheap." And it was like it was literally like $1 million, like even like that. She just had in her head she wanted $1 million for it. I don't know why. I mean, and it was it's weird because it's got a land lease, so like we don't own the underlying land, we only own the building, and like it was hard to justify paying $1 million for it because the lease that they had on it had 19 years left on it, right? And I said, okay, well, let's put it under contract, and then let's go find the person who owns the land and see if we can renegotiate the land lease. And if we can get it extended, then we can buy it because it's worth a lot more if it has longer on the lease, right? Because when you're less than 20 years on a land lease, you basically are forced into a situation where you might be amortizing your debt,
Yeah.
and not have it paid off, and you no longer have the building,
the asset,
right? And so banks aren't even going to lend on it, and that's why it really retrogrades the value pretty significantly. And I talked to the guy who owned the land and tried to buy the land first. We just buy the land outright,
yeah,
right? Like the lease was like the lease payment's like $3,000 a month. It's not that much, right? It's like it's relatively small lease payment. And he didn't want to sell it. He inherited it. He lived off the money. He owned a couple of other pieces of land like that, and that's all he lived off. Like $10,000 a month, and he just lived off of it. And I said, well, aren't you worried what's going to happen when the lease is up? And he was like, I hadn't really thought about it. And I'm like, I'll tell you what, why don't we'll just make it a 60-year lease instead of a 20-year lease. And he goes, okay. It was literally that simple. So we went and we bought the building, and the lady told me at close, I've been trying to extend that land lease for years. And I was like, that's weird because it was so easy, right? So then I called the guy afterwards and I said, hey, like, what's up? He's like, oh, I hated her. She was so terrible. I was never going to extend the lease for her. And so, like, I'm like, I don't know. It's like, and she kind of was like not a very nice person, actually. Like, and the guy who had kind of turned me on to this deal is like one of my, like, he like works for me now. Like I met him at this one closing, and then he's a contractor and he does a ton of work for me now, and like we're really close. And it's his aunt, right? And he's like always complaining about how terrible she is to me, and I'm just like, well, it worked out for me. I don't know, because we appraised at $2.5 million.
Okay.
We paid $1 million.
Yeah,
that's pretty good. And I 1031'd into it.
Okay, that's awesome. Mm-hmm. Now, is that a long-term hold for you, or
I've had it? I bought it twice. That's another story in and of itself. First time I bought it for $1 million. The second time for $2 million. Because the first time we bought it in a syndication, and then I bought out all the partners. Mm-hmm. And I used a 1031 to buy out the partners. So that was like a really complicated thing. And then we had to go through like the compliance on that is really hard because, I owned a part of it and I want to buy a bigger part of it. So like you can do that. But then, there's like all these common ownership rules and stuff we had to negotiate through and make sure that we follow all the rules. But so the first time we bought it was like 2018, something like that. And I still have it. So it's at least that long.
Okay.
Yeah. But it's good. It cash flows really well.
And are they mostly triple net or are they like double net?
Yeah, it's a combination. There's a couple of people that had leases that had renewal options from before I took over the first time. Like the bookstore's been there a really long time. It's like Christian family bookstore thing, and they just exercised another 3-year option like last month. But that's their last one, and they're way below market rent, and I don't think they can afford market rent. So I'm like, well, whatever. I knew it was that way the whole time. Yeah. 3 years from now, I'll worry about that. I'm not worried about it now.
Right. We'll worry about that when we have to.
Yeah, I can't do anything about it anyway. Yeah. He actually asked me if he could do a 2-year lease instead of 3. And I was like, yeah, it'll be double the price. And he's like, why? I'm like, because that's how much you would pay if you were coming to me to rent it right now. Like, if you want to exercise your option, you have a contractual right to do it. But I prefer you don't. That's literally what I said to
Oh, that's great. Okay, so then you also have an office building, correct?
I have 3 office buildings. Yeah.
3 office buildings. So one of them I think you're in right now, correct?
Yes. So this one we have 1,600 square feet on the second floor that we use for our own office, and then we have about 3,000 square feet downstairs that's individual offices, and they're leased out by the office with some common area. So it's kind of like a hybrid, like we work kind of thing, but like you get a private office. Yeah,
Yeah.
it's like not really co-working because you have your own office, but like you just pay like $400 a month for an office. It comes with internet, all your utilities included, and stuff like that.
No, I love that. I'm actually looking
Yes.
to do something similar.
Yeah, it's been really good. It's challenging to manage,
Okay.
but it does definitely up your cash flow a bunch, and it's not that difficult to manage. And since we're like literally on site, it's actually not difficult for us to
Yeah,
manage.
that makes total sense.
The bigger problem is like you do get turnover, so it's more like an apartment building at that point. Like a lot of people will sign like 1 year leases, and they might stay a year or 2 or 3, but they're not. We're always having 1 or 2 vacancies. We have like 14 units, and but it's fine because like if we rented the whole space to 1 or 2 tenants, we'd probably get like 50% less net rent after all the expenses. I mean, we're paying for you know housekeeping and utilities and stuff that we want to be paying for then too. But overall, it works out better this way. So
Yeah. No, that's great. Okay, so I love your diversity. I love your product mix, if you will. So let's dive into Puerto Rico because this is a new
sure.
market, and this is a market that, maybe people have an interest in getting into. It's still technically, part of the continental, or I guess not
Yeah.
continental, but it's
Yeah.
still US territory. And so you need a
Yes.
passport to go there, which is great. Still have similar tax policies. Am I correct on that?
Actually, it's pretty different.
Okay.
So
Educate me on Puerto Rico.
yeah. All right. So the super short version is like you said, it's technically considered a commonwealth.
Mhm.
It is the Supreme Court said it was an appurtenant territory, which means nothing. It's completely made up.
Mhm.
There's several Supreme Court cases and a lot of congressional laws that sort of identify how its status is, but it's really the most clear thing that the Supreme Court said is that Puerto Rico belongs to but is not a part of the U.S., which makes it essentially a territory.
Mhm.
Some people in Puerto Rico consider themselves, you know, being colonized. Like we're a colonizer, so you get a little bit of a negative impact from that. But what it does mean is you don't go through customs. Everyone who's born in Puerto Rico is a U.S. citizen. This is also true of Guam and I think American Samoa as well, and the U.S. Virgin Islands. The Supreme Court and also Congress have been very clear about the fact that income earned in a U.S. territory is not taxable in the United States. So federal income tax applies to U.S. citizens anywhere in the world except for in U.S. territories. So if you live in Puerto Rico and you make your money in Puerto Rico, you pay tax to Puerto Rico. You do not have to pay tax to the federal government. That's, like I said, true in a few other places too, primarily the Virgin Islands and Guam. And what the Virgin Islands have done, I don't know about Guam, but what the Virgin Islands done is they pass a law that says you fill out a 1040, whatever you would pay the IRS, just pay us that. So the taxes are pretty much mirrored. I assume Guam did something similar. I don't know. I've never verified it. Puerto Rico did something like that for a while. Then they came up with their own tax regime, which was actually a little bit higher than what it was, lower in the 80s. And then Reagan had some tax cuts come through and cut the high rates. And then theirs were higher. And because, it doesn't apply. Like when they do tax code stuff in the US, it doesn't change the Puerto Rican tax code. So Puerto Rico in the 60s and maybe the 50s even started coming up with this idea that will incentivize US businesses to come to Puerto Rico. So they started doing like specialty tax credits. Like if you're in medical services, we're going to lower your tax rate. If you're in manufacturing, we're going to lower your tax rate. So they did a bunch of that. And then in 2012, I believe it was, they passed a thing called, it's now called Act 60, but it was Act 20 and Act 22 that created special classes of tax rates for non-residents who wanted to move to the island. So now you have this situation where, as a U.S. citizen who does not live in Puerto Rico, and the rules are you can't have lived there on a certain date in 2013, right? So if you didn't live there then, in other words, they exempted their own people from it, and that's caused some animosity, of course, among local people. But the rules basically say, you come to Puerto Rico, we're going to give you a tax compact, and that compact is going to be good for 15 years, and it's going to be renewable for another 15 years. And depending on which category you fall in, you're going to get a very low tax rate. So like if you wanted to start a consulting business, let's say I don't want to be a professor anymore, I'm going to go start a consulting business. You move to Puerto Rico, you apply for what's called an export service license. An export service license means you can only perform services from the island to people that aren't on the island. That's all. So you literally would just be like, I'm a consultant and I consult with US companies. Then you would be taxed at 4%, and that's it. And you're exempt from federal income tax on that income.
Oh my God.
And it's, of course, it's designed to encourage people to come to Puerto Rico and produce money that they don't otherwise have, right? That's the theory.
Yeah.
Now, in practical sense, there are some problems with how it's set up, but they created a whole slew of these. There's tourism credits and hospitality credits and manufacturing credits, and then the export service credits and individual investor credits. They have 0% on capital gains if you apply for it. Like, so cryptocurrency people are there now. Tons of cryptocurrency because they can buy it. They don't have to worry about ever paying tax.
So if you lived in Puerto Rico for more than 6 months,
yes,
are you still entitled to not have to pay U.S. federal taxes?
Well, so if you own stuff in the U.S., you're going to pay tax on it. So like my real estate investments, I'm going to pay U.S. tax no matter what.
No matter where.
Even if even if I give up my U.S. citizenship, it's income earned in the U.S. It's based on where the income's sourced. So that's the starting point. So say you spent 183 days in Puerto Rico, 6 months plus 1 day. And you earned all of your income in Puerto Rico. You didn't earn any outside of Puerto Rico. Then yes, that's how that would work.
Okay.
You would only pay whatever Puerto Rico charges you. Now, you might not qualify for the 4% rate or any of the other discounted rates. You have to go through an extra, because they do require you to fill out a bunch of paperwork. They require you to file tax returns there. They require you to do a $5,000 a year donation to a charity in Puerto Rico, pay a fee to the government every year of $5,000. I don't do this stuff because I don't actually live in Puerto Rico, so it's irrelevant to me. Yeah. But like there's a whole series of things that you have to do to qualify for it. I haven't needed to qualify for it because I have a lot of carry forward depreciation losses from the bonus depreciation. So I don't pay tax anyway. So like, I don't need to worry about it, but I'm paying attention to it because bonus depreciation's been phasing out. Now that may turn around with the new administration. We don't know for sure. It's been phasing out, and I'm running out of carry forward losses. So I will have to start paying taxes at some point. And plus my basis on stuff is really low because we took all this depreciation. So like, I know at some point I'm going to be paying tax. So as a result of that, like I'm interested in strategies to mitigate potential future tax. I don't think there's any solving for the low basis problem other than 1031 until you die, which is what I intend to do with those, or strategically pay taxes on years where you have low tax rates, you don't have other income, take small hits here and there on tax. And also, purchasing other stuff to create new depreciation is another strategy that works. So I am like actively contemplating how to keep my tax burden as low as possible. It's the only reason I know anything about Puerto Rican taxes. That, and we started a couple of businesses there. So
so that's where I want to head now. Is I want to talk more about some of the businesses that you have now created and are working to grow and expand in Puerto Rico.
Yeah, so I had so I love Puerto Rico. That's the starting point. So I went to Puerto Rico 4 years ago. I'd been there several times for like long weekends or stuff. And I went there like 4 years ago for like a long weekend. It was first trip out of the continental US post COVID, right? And I was like, I just need to get away.
Mm-hmm.
And they were still requiring negative COVID tests to come back to the US from everywhere in the world. But because Puerto Rico doesn't go through customs, they weren't requiring it to come back from Puerto Rico. And I was like, I don't want to get stuck somewhere. So I'll go to Puerto Rico because Puerto Rico required a negative test to come in. But the US didn't require one to come back. So I was like, well, I don't care if I get stuck in the US, right? Because like they don't let me to Puerto Rico. I just don't go to Puerto Rico. I'm at home. It's fine. So that's what I did. I went and I bought the plane tickets. I took the test. I got a negative test. I went to Puerto Rico. I came back. I didn't worry about it. But while I was there, I met with a couple of real estate investors I know. A real estate developer out of Idaho was one of them, and he was telling me about the tax incentives and why he was there and how he created a consulting company to consult with his U.S.-based business. And I was like, "Whoa, that's smart!"
Mm-hmm.
Like now he's paying consulting fees from his U.S. company to his Puerto Rican company and getting this reduced tax rate. And I was like, "That's really interesting. Like maybe I should learn about this." So then I had a meeting with. Somebody listening might even know who this is. It's Harry Dent Jr., right? So Harry Dent's a Harvard MBA economist. He wrote a couple of books. He predicted the fall of the Japanese economy back in '89. And like at a time when everyone thought the world was going to be taken over by Japan, he was like, nope, it's not. And here's why. And because he's like a big like macro trend guy. Yeah. Right. And he's less famous now than he was in the 90s, but he's like, he's sold, millions of books and everything. But anyway, I know Harry from a real estate conference a while back, and I texted him and said, Harry, I'm in Puerto Rico. Like, let's have dinner. And he's like, okay. So we went out for dinner and I asked him about the tax benefits and stuff. And he was telling me like how much he loves living in Puerto Rico. And I walked out of that dinner and I turned to my buddy who was with me. I said, I think I'm going to move to Puerto Rico. And he's like, why? I'm like, it's just, there's so many cool things going on here. Cause like all of these tax incentives bring in all this neat entrepreneurial stuff. Mm-hmm. And it creates a system where, and the reason I'm telling you this is because one of our businesses is heavily dependent on this system, right? But it creates a system where, you can do things that you just can't do elsewhere. Like like economically it doesn't work. Mm-hmm. Right. And I love that. And I thought it was really interesting. And since I've been I didn't end up moving because I decided the taxes didn't really help me that much. And I ended up going through a divorce I wasn't expecting and all this stuff. So I just didn't ever get around to moving there. But I did buy a place there and I love it. And I spend 120 days a year there or something like that. So, 3-4 months a year, and not at once. I'm like, 1 week in Puerto Rico, 2 weeks in Chattanooga, 1 week in Puerto Rico, 2 weeks in Chattanooga, like almost every month.
Okay.
I would say, there may be a month or two a year where I don't go. And there's also a month or two a year where I don't come to Chattanooga. So I spent like all of I think I was January 1st to January 29th in Puerto Rico this year. So I get the big chunks of the better weather in Puerto Rico and stuff like that. So
makes sense.
But anyway, so it's really fascinating. So the businesses I started there, one was just kind of for fun because I like cigars. So we started a cigar line. We found a farm in Rio Grande, Puerto Rico that could source us tobacco, and we're doing hand-rolled Puerto Rican cigars. I think we're the only company in Puerto Rico that has the license to export cigars from the island.
I love that.
So we haven't started exporting yet, but we did get a federal export license, and we've gotten registered in Florida and Tennessee. So we will soon do that. And that's been fun, and we made a tiny bit of profit. But the main advantage there is we made cigars that we really like, and we get them at cost. So
yeah, exactly.
It saves us money.
Have a business that benefits you.
Yeah, exactly. So it will. I think it will be profitable. I mean, it's not designed to be a retirement account or anything, but It's designed to be a fun little side project that makes some money.
Absolutely.
Yeah. So there's 5 of us that split it, and it was a really small investment. So it really wasn't a big deal. And then the bigger project that I'm working on though is we're building a shipyard to build sailing catamarans, 55 and 75 foot catamarans. For the U.S. charter market. And this is where the tax incentives really matter. So Puerto Rico being part of the U.S., it qualifies under what's called the Jones Act. The Jones Act basically says all commercial watercraft operating in U.S. waters has to be U.S. manufactured. So that's the starting point. So we're focusing on commercial vessels. Like these are big sailboats that are designed to take out groups. People pay to be on it. Maybe they're buying a ticket, maybe they're paying for the whole boat, but they're paying something to be on
Mhm.
it. There are comparable boats that are made in South Africa, France, Denmark, but there's none that are made in the U.S. Currently. There are some custom made boats in the US, but there are none that are like specific production line boats. We know this because my buddy, who's my partner in that, has a charter sailboat company, can't buy the boat. Like it literally was like, why can't you buy the boat, Todd? And he's like, well, no one's making them. It's really frustrating. And I was like, well, can you custom make them? He's like, yeah, it's like $4 million. It takes like 5 years, but I guess I'm going to have to do that. And I was like, wait, can't we like build a factory and make our own boats in less than 5 years? And he's like, probably. And that's how it started. Like, like we're like,
Crazy.
let's just figure it out ourselves. And it turns out it would be really impossible to do it. And this is why no one's doing it. There's a lot of barriers to entry involved. You've got to be able to have access to water. You have to be in a place that has like good ocean access, deep water ports. You have to have access to manufacturing. You have to have access to the right materials.
Mhm.
And so you really kind of need to be close to a port or in a port. That narrows it down dramatically to where you can actually do these things to build
Right.
a shipyard. There's a huge financial cost to building a shipyard. And then there's also a huge labor cost. And all of a sudden I'm like, wait a minute, this might work because Puerto Rico has tax incentives for buying manufacturing equipment, like huge tax credits that are refundable, transferable tax credits. Um, so we can spend more money on automation to keep our labor costs down pretty dramatically. And they also have incentives for hiring new employees because they're trying to stimulate their economy. So every employee we hire, we're getting a tax incentive for that. And the labor rates in Puerto Rico are less than there in the US for comparable work. And there's also a huge industrial port in Ponce. So we're like, hey, if we can get close to this port in Ponce, we can make this work because we can get all these tax incentives to lower cost,
Right.
and we can have access to the materials we need, and in the ocean, right? Like we've got everything we need.
Yeah.
And so we cut a deal with the port authority, and we leased a piece of land inside the port, actually. So
Wow.
and there's no other land inside the port you can lease. So like we don't even have to worry about competition. Like
Yeah.
people can try, but like I don't. They're gonna have to find a different strategy if they want to build boats to compete with ours. So we're
Interesting.
gonna build, and we've got the Coast Guard. We're working with them to have them pre-approved. So once the boat is designed and built and dropped in the water, it's going to be Coast Guard certified and Jones Act compliant, which means the second the boat hits the water, it can be used for commercial purposes. And the only other competition to that is custom boats that are one-offs. So I think it's going to be a really great project, but it's like we're 2 years into a 6-year deal. So like we'll see in 3 years if we get there or not. I think we will, but
Yeah.
it's primarily self-funded so far. So we're going to raise some money soon. I think we'll start doing that, but we got to get the rest of the design work done. Right now, we're under contract with a ship designer to design the sailboat. We've got a naval architect designing the shipyard itself, and then we've also got like consultants that are helping us with tax credits and all that stuff. So once we get all of that stuff done, which is still a fairly big chunk of cash to get it all done. But once that's all done, then we'll have to raise some money because I can't self-fund the development of a $20 million factory out of my pocket. I mean, I have some cash, but I don't have that kind of cash just laying around.
Sure.
Even enough cash to pay the down payment on that would be a stretch,
Yeah. That's awesome. So as far as like timeline is concerned, what are you thinking how long is it going to take to get the shipyard kind of up and going? And then once you have that, how long is it
Yeah.
to, like
So, we'll build 25 boats a year at max capacity. So it's not going to be like 1,000 or something. It's just a small factory. It's a 1 acre parcel. Um, It'll probably take us about 3 years from where we are now before we're dropping the first boat in the water. It might even be 3.5. I had a conversation with the designer this week where he said, "Hey, I can have these designs done before the end of the year." So like, that's like, we're gonna get there, but it's just a long, slow process.
Yeah.
And then it's gonna be a function of how fast can we get the automation equipment in place, how fast can we raise all the money that we need. So there's variables that make it really hard to know the exact timeline. But I'm pretty optimistic that the 2027, 2028 timeline is when we'll really be up and rolling. And then probably at full production by 2029.
It's awesome. So you bought a condo in Puerto Rico too.
I
And
did.
how was that process when, acquiring land in Puerto Rico
Yeah, I'm
versus
actually
acquiring?
glad you asked that. I did a video for my YouTube channel about this. I have this channel I do for fun called Puerto Rico Life. And I just make videos of like random stuff in Puerto Rico. I love it. It's fun for me. I don't know why it's fun for me, and I don't know why anyone watches it. I can't even recommend it. It's just literally like me holding up my phone, being like, "Hey guys, I just bought a condo. Check it out." Stuff like that, right? When people watch it, I give me like 1,000 subscribers or something like that. So we get a few views here and there, but it's pretty fun. Anyway, so this is actually wild. I could go really deep on this because I found this fascinating. So unlike the US, the Puerto Rican real estate system is not based on English common law. It's actually based on the Spanish Civil Code. Because they had real estate in Puerto Rico before the United States took over after the Spanish-American War. And the system that was in place then has continued till now. Now the Spanish Code, it's different, like their inheritance rules are different. The recording system is different. So like, in the US, you pretty much have only a couple of options, but all of them pretty much there's a central database somewhere where all of the property records are held.
Mm-hmm.
That is not true in Puerto Rico. There's no county register of deeds. There's no state register of deeds or island register of deeds. Instead, deeds are held in lawyers' offices. So whatever lawyer created the deed is required to keep the deed. And as a result of that, title searches are very complicated because you might have to go to 5, 6, 7 different lawyers' offices to verify the deeds. And then there's also the risk that, there's a fire or hurricane or something like that destroyed the deeds, in which case there's no electronic backup of that deed. And then, of course, when lawyers retire, it becomes complicated too. Actually, the retirement process isn't so bad because they're required to turn over all their deed books to what is actually a register, like a central registry. So like the really old deeds are all with like the central registry, right? But it is pretty complicated. And as a result, there's almost no options for like title insurance and stuff like that. I put my condo under contract in October. The seller, who I know, said to me, I need to close in 15 days. He's like, I need to close in 15 days. I said, I'll have the money. If you can sell it to me, I'll have the money. I borrowed the money from friends, I scraped it together, got everything ready, put the money in my bank account, started paying interest on it. And we closed in February.
Wow.
4 months. One seller, one buyer, cash transaction. Took 4 months, even though he wanted to close in 15 days. And it was because of the title system. And it was his title attorney that could not solve the problem. Part of it was there was a small tax lien on the property. And between the first week of November and the first week of February, Puerto Rico government offices are closed more than they're open because it's Christmas season. So like, there was issues with that. Like there's all this stuff, right?
Mm-hmm.
And we got it done. And I got a really good deal because I was willing to close fast and I didn't have to close fast. So that was nice.
What was can I ask what the purchase price was?
Yeah, it was 175.
Okay.
Studio apartment, but ocean view in a good area, a half mile from where the apartment I had been renting was. So I was really comfortable with the area. And,
nice.
It's a kind of not great building, but it's good solid construction. And it's in a good area. So I feel like, it's one of those things where like it's on the upswing, not the downswing. And it was cheaper than my rent. anyway. Even with the hard money loan that I had to take to do it, it was still cheaper than my rent. So it's smaller though. I went from a 2-bedroom to a studio, but I mean, it's just me, and I'm only there 100 days a year. So
Yeah.
it's a place to keep my stuff and crash, and it works for me. So
Yeah. So how much was your rent that you were paying for a 2-bedroom in Puerto Rico?
Well, Puerto Ricans will laugh at me if they hear how much I paid, but it was 2,500 a month.
Okay.
But I had a balcony ocean view, 5 minutes from the airport, turquoise water. I mean, the same view in Miami would be 20,000 a
Oh,
month.
right.
So like,
Exactly.
and I have I have better
2,500
weather than
still.
Miami, and like I like Puerto Rico more than I like Florida. So
Yeah.
so for me, $2,500 a month seemed great.
Yeah.
But I mean, if you want to live off the ocean in maybe out of the city a little bit, and I'm not talking like crazy far in the countryside, but like just a little. I know people that rent like 5-bedroom houses and like have an acre of land and like a distant ocean view. Like they can see they're up on a hill and see the ocean, and they pay like 2,500 a month, like for that.
Yeah.
And I know one of my friends rents for, and again, he just likes to go to Puerto Rico. He lives in New York. He was renting for like $500 a month. And he was like, it's so much. He's like, I go to Puerto Rico like 40 days a year. And he's like, it's cheaper for me to have an apartment than to get a hotel.
Yeah, right. That's what I was just going to say. If you're going to go and you're going to have a vacation.
Yeah. $6,000, you can have an apartment for the whole year,
you
right?
Can go at any point. Right.
Yeah, $6,000, you can have an apartment for the whole year. No, listen, that's going to be in a neighborhood where if you don't speak Spanish, you're not talking to your neighbors. I'm in a tourist neighborhood. My Spanish isn't very great, so I'm working on it. Wonder sometimes about my English, but I'm, working on that too. So, but yeah, no. But the reality is that you can get by in most parts of San Juan without Spanish. But there are definitely places in Puerto Rico where you need to speak Spanish. I mean, Spanish is the official language of the country. Right. Technically,
we get mad at people who can't speak English. I mean,
yeah, of course.
You're going to their country. This is their customs. Like,
yeah, and I actually, by the way, I get both sides of it. I mean, it's hard to learn a language. Mm-hmm. So like somebody comes here and starts talking to me in broken English, I appreciate the effort. Mm-hmm. If I speak their language, I'm going to talk to them in their language. Mm-hmm. And the same is true in Puerto Rico. Like, this is why I like where I live. Like, I speak a little Spanish, but if I try to speak in Spanish and the person speaks English, they know I speak English. They respond in English. It makes my life easier. Mm-hmm. And they appreciate the effort,
yeah,
so.
For sure.
And my Spanish is like beginner-ish. Like, it's not, I mean, I wouldn't say beginner. Like, they rate languages like A1, A2, B1, B2, like that. And I'm like somewhere between A1 and A2. So like I have like mild conversational ability, mm-hmm. but like it's real mild. And if you're talking fast, forget about it. I don't have any idea.
Right. Right. I'm right there with you. I have, mild Spanish abilities. I know enough to be dangerous, but probably not enough to carry on a full-on conversation.
Yeah, no, I mean, listen, I can talk to the Uber driver when he asks me like, is it your first time in Puerto Rico? I can be like, no, I'm here a lot, mm-hmm. Stuff like that. But yeah. But I mean, like, yeah, I'm not. You start saying to me, hey, I want to tell you a story about like, my grandparents and how they first arrived in Puerto Rico. I'm lost by like sentence two, right? Because I never think about those things. And it's not that that's particularly hard language. It's like the words that I know are like how to order stuff at restaurants, right? How to find like things in the supermarket.
Like
the stuff that I actually need to know, I know how to do that. Yeah. I don't know all this other stuff. And I've been working on it though. Like I hired a Spanish tutor, with the shipyard project. I do think it's important for me to be able to speak the language of the people that we're going to hire. Mm-hmm. So I've been working really hard the last 6 months to get better at Spanish. And I've gone from like 0 to like, where I'm at. And unfortunately I have a couple of years. So hopefully, a year and a half from now, I'll be in that spot where, we start hiring people. I can actually talk to them. So.
Yeah, no, that's awesome. I love that. Okay, Jeff, we're getting to the point in the show where I like to ask my guests what books they have read that they would recommend, or maybe books that they're currently reading that they think would be really good reads for somebody who's maybe early on in their investment journey.
Yeah. Okay. So, the obvious one that everyone always says is Rich Dad, Poor Dad. So I'm just going to throw that out there for a second and tell you I actually do like that book. I'm one of the weirdos that still likes that book. But I don't think it's a real estate book. I really think it's a finance book, but I think there's wisdom to that idea of like understanding the financing. So I do like that book. One of the books that really was impactful to me is a book by Brian Murray called Crushing It in Commercial and Multifamily, or maybe Apartments and Commercial Real Estate. Something like that. I think it's Crushing It in Apartments and Commercial Real Estate by Brian Murray. Great book. Really gives you an underlying idea of things like cap rates and how they work and why they're important. And it opened up a whole new world to me. I was doing all single families. I read that book and I went, I need to do a multifamily. Like it literally was that fast. Like within a few months, I was completely diverted to a new thing. So if people are trying to decide what kind of real estate to do, that one's really good. There's a book by a guy named, I think it's Larry. I'm not sure. The last name is Loftus. There's a book. It's called Duplexes, Triplexes, and Quads. It was written a long time ago, so the numbers are off. But he makes a really compelling pitch about why those are really good asset classes. It's something Loftus. I can't remember right now. I should have been more prepared. I apologize.
Okay.
I think if you read that book and combine it with the Brian Murray book, it will give you a pretty broad overview of the different types of real estate that you could be considering outside of single families. And I think that can be really useful for a newer real estate investor, because when we were talking at the beginning of this podcast about the importance of really drilling down and understanding your market, I think there's also something really important about being specific about what you're targeting. Like it sounds cool to just, have an office building, an industrial building, some apartments, and it is cool, but like you can't start with that. Like you got to pick something, like pick a lane, focus on it, get good at it. And then you can transfer some of the skill sets to the other stuff. Right. And even still, I don't think I can do everything. Like there are definitely types of real estate, like storage units. I don't know how to do it. I'm not saying I couldn't learn it, but I'd have to learn it. And I don't do the like big Class A apartments for that reason too. So that's the thing. But of course, the most important book for everyone to read is this one right here, No Bad Days by Jeffrey Holst. I heard the author's amazing. I don't know.
Do we have like a discount code or something that we can plug
it's like $14 on Amazon. I don't know, like I make like 40 cents if you buy it, so I actually don't care if you buy it or not. But it's a pretty decent book. It tells my whole life story up to about 3 years ago. In my philosophy. So like the super short version is I was a bankruptcy attorney. I ended up getting leukemia in 2008. It drove me into personal bankruptcy. And then I reinvented myself through real estate investing. So it tells that whole story, but through the framework of my belief that we get to choose whether we have good days or not. And so when I was 17, I chose to never have bad days again. And I haven't, even though I had leukemia and went bankrupt. And when you read my follow-up book, which isn't out yet, so you can't read it.
Okay.
I haven't even mentioned it publicly until just now. Actually,
a little plug here. I love
when you read my follow-up book, it's just only 10% written, so it may never come out. But when you read that, I'm going to throw it out there.
The boats go in the water, right?
Yeah. Well, the book. So I actually plan to write the majority of it this year.
Okay.
It's not about the shipyard, but it is actually about what I've experienced in the last 3 or 4 years. So it is a memoir-ish book. And so it does have an element of that. But when you read that, you'll find out that I also had melanoma. I went through a divorce I didn't expect. And still, I haven't had any bad days. And so that's why I think the book is really powerful, because it outlines how you can give up bad days and why you should do it. And it's mostly just a choice. So I think people need to make that choice. And I mean, listen, I could talk about this forever. I wrote a whole book about it, obviously. But the super short version is good and bad stuff is still going to happen to you. Like it's going to happen. You're going to have good stuff happen. You're going to have bad stuff. And there's a quote by the Dalai Lama I like. I'm not Buddhist, but the Dalai Lama said it never makes sense to worry, because either you can do something about it or you can't. And if you can do something about it, you should just go do that. And if you can't, the worrying isn't going to help. That's kind of how my philosophy on No Bad Days works. It's like good stuff happens, cool, embrace that, be happy about it. Bad stuff happens. Well, there's only 2 scenarios. Either you can do something about it or you can't. And if you can do something, go do that and make your life a little better. Right. And if you can't, just take whatever lesson you can get out of it and move on, because there's nothing you can do about it. Like, it wasn't my fault I got leukemia. Like, it wasn't. I mean, it's just a random bad luck. But it was my choice how to deal with it. And there was stuff I could do about it. I could find the best doctor, so I did that. And as a result, my life's been really great. And I've got to do a lot of really cool stuff. And when I look at it in retrospect, probably the best day of my life, because before that, I didn't have any real estate. I said I was exposed to real estate as a kid and always wanted to invest in real estate. I didn't buy any real estate. I mean, I did do the one flip in law school, but like I didn't own any long-term buy and hold real estate. But then when I got sick and I thought, I don't know if I'm going to live or not, I thought I got to figure this out. Like someday may never come. Like I need to do it now. I need to make sure now ex-wife, but at the time my wife has money if I die. Like I need to figure this out. And so I started doing real estate because it was the only thing I knew about. And it changed my life completely. And I've had an amazing life because of it. So that day that a lot of people would say is a bad day is really probably the best day of my life.
Love that. Love that. Jeff, it has been a pleasure. And I love catching up with you. I'm excited to catch up with you again, hopefully soon. But any last pieces of advice for our listeners before we call it quits?
Well, besides the obvious, don't have bad days.
Right.
Listen, I'm going to paraphrase things that I've heard said of very different ways. But there's something I think that's really important. Like if you're thinking about investing in real estate, you should not wait to invest in real estate. Like, they say things like, don't wait to buy real estate, buy real estate and wait, things like that. My philosophy is that it's actually really easy to time the real estate market. People always say it's impossible or difficult. It's actually really easy. It's just like buy whenever you buy and sell when it's high. Because you're up if you're up, right?
Right.
So I would say, if you can find stuff that works, then go buy it. Don't worry about, there might be a crash coming or there might, because if it works now, it'll work later. Like, I mean, if you have long-term debt in place and you have adequate cash flow and you have some cash reserves, you can survive anything.
Absolutely.
And so some of the stuff I bought was really good timing. Some of it wasn't as good a timing, but none of it's dragged me under. And the biggest regret in my life is that I didn't start buying real estate before I got sick. Because if I had, I wouldn't have been bankrupt.
Very true. Very true.
So I would just say, go figure it out. I started thinking about real estate when I was a child, literally. I snuck out of my bedroom late at night to watch Carlton Sheets, No Money Down infomercials. I'm literally 12 years old, sneaking out of my bedroom to watch TV. And what do I choose to watch?
Oh my gosh.
Real estate infomercials, right? And I still didn't buy any real estate until I was 31.
Yeah.
That's crazy. I should have bought when I was 18 in one day, as soon as I was legally able to.
Right. So,
and I think that's true. Even the house that I flipped in law school, if I just kept that house, I would have been more well off. It's worth a lot more now than what I sold it for.
Oh yeah, absolutely.
And so I would say, real estate's actually pretty forgiving over the long term. So it's like any kind of investing, the longer you have it, the better you do.
100%. Yeah. Awesome. Well, again, thank you for being a guest on the show. Appreciate it. We'll make sure to put your book in the show notes so that everybody knows how to get a hold of that. And if they wanted to follow you on social media, what's the best way to?
I mean, honestly, it's at Jeffrey Holst on every social media that you can think of. If it exists, I probably have at Jeffrey Holst. If I don't, you should grab it because you might get me to buy it from you later. I don't know.
No,
but I mean, for real, TikTok, Be Real, Facebook, Instagram, all the places I use at Jeffrey Holst. And we also have a Facebook group called Last Life Ever. So it says Last Life Ever, and then it says private group in parentheses. And that's all about living the best version of your life, which is really my real passion. I love real estate because it affords me the lifestyle that I have. But at the end of the day, I do a lot of really cool stuff, climb mountains and start passion projects for no reason and travel a lot. I'm travel a ton. And then this summer, I'm going to do the Camino Santiago. Do you know the Camino Santiago?
Mm-mm.
So it's a 500-mile footpath across rural Spain. It goes from the French border to Santiago, Spain.
Wow.
It's like a Catholic pilgrimage. I'm not Catholic, but a lot of Catholics pilgrimage from all over Europe. They'll walk on foot to. It's been since the Middle Ages this has happened, but they walk on foot to Santiago to see the traditional tomb of Saint James. So I'm gonna do that, I think, in August.
Awesome.
It takes about 45 days.
Wow.
But like I can do that because I have real estate and that's why I love real estate. Like most people can't just take 45 days off. I took a month off to go to Asia last year. The year before that, I did a month in Africa. I just like I'm always constantly going. And by the way, that's on top of like spending 150 days in Puerto Rico, right? Like it's like so like if you really do the math on it, I'm hardly ever home,
Yeah.
and I love that. I mean, it's not for everyone, but
Mhm.
but the point is, I get to choose,
Right.
and I get to do that because of real estate. So
Yeah, I think that's a good lesson is that real estate gives you options to choose what you want rather than having to be forced into certain options.
exactly,
Yeah.
yeah.
Awesome. Well, again, thank you. And that wraps it up for another episode of Inspire Wealth. I am Prof M out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.